Hello guys, and welcome back to another video. In this video I'll be explaining to you what the draw on liquidity is, or for short DOL. So now, what does draw on liquidity mean? Well, simply draw on liquidity simply refers to where price is likely to go to next. Okay, so for example, over here I have a diagram that explains this in a bit more detail. So say for example we have price trade down into a higher time frame level, such as a daily fair value gap or a 4-hour fair value gap, right? Depending on what your higher time frame you're using to analyze your charts. Then we see some displacement on our lower time frames, right? So we can assume if our higher time frames suggest that overall we're bullish, right? If we see a reaction and displacement off of this level and a fair value gap on a lower time frame, we can look to enter that and assume that the next likely place that price is to go to next will be potentially an old high that we formed prior to making this fair value gap, which is above price here, right? So then we can assume that we can target that. So this is an example of draw on liquidity. So the draw on liquidity here would be this old high that would be somewhere in price action here. Now me personally, I like to enter off of the 5-minute and lower. So I'll be using mainly the 4-hour and daily to derive my bias and draw on liquidity. However, if you are someone who likes to enter off of the 1-hour time frame, then you potentially might want to look at the weekly chart to help you get your draw on liquidity. Okay guys, now we're going to be going through example number 1, and with this example here I'm on a 4-hour time frame on NQ. So let's let price play out and I'll go through my exact thought process of how I derive my draw on liquidity. Okay, so we're trading lower, broke this low here. So now we've likely formed a swing low right there. With this candlestick here, we traded below this low here before quickly rejecting and moving to the upside. So right now my thought process is, if we have a nice closure above this CB right here, then we've likely formed a price range from this high to this low. So this is what my price range would look like. This is a premium and this is a discount. If we've already formed the price range right here from this high to this low, I can see that we are on a discount. So I'd be looking to first off target this equilibrium price point, and then after that I would look to target anywhere in a premium. So we have this low right here which forms a breaker, high, lower low. So these two candles form the breaker. Okay, this is a premium array we can look to target. So this is a breaker, and then obviously you can target mean threshold, which is the midpoint of this order block, and then we also have this CB right here, which is another target. Okay, so you guys get the point, right? We'll be looking for areas we can target, and these are our draws on liquidity. This is draw on liquidity number 1, 50% or equilibrium. Draw on liquidity number 2, this breaker, and then draw on liquidity number 3 with this CB, and then also the high as well, right? So let's let price play out. Okay, we close above it like that on this candlestick right here. So on this candlestick right here, any retest down, right, we also get immediate rebalance of this candlestick right here. So this is a 4-hour time frame. On my lower time frames here, I would be looking for any reversal pattern to target long. Okay, making sure I target the high here, for example. This candlestick right here, we're approaching the 50% mark. We've also traded down into this wick here, which we can use as a discount array to propel price upwards right there. See how we've respected it. And then going into the next few candles, my draw would be up here. Also this liquidity void here where no trading occurred. These 2 points of reference here would be my next draw on liquidity. So let's let price play out. Okay, retested that fair value gap. This candlestick we closed bullishly. Over here we retest it again. See how the wick is now being used as a reclaimed gap. Okay, we touch it again and then we hit the equilibrium price point. So now going forward, I would like to see us traded into this breaker right there. We then trade down, take the sell side here, digging into this bullish order block, down close candle, draw out the opening price like that. So this will be a higher time frame point of interest. Notice how we hit mean threshold and then reversed. We're now consolidating equilibrium, looking for now this breaker and this CB. Okay, we hit mean threshold there, closing above it. So now that I've seen us close above mean threshold, this to me suggests that we are likely to take out the high, because if we were actually very bearish, we would fail to close above this breaker, right? And we would likely see a displacement on the downside. However, here price is showing strong bullishness, so I would be looking next for this CB mean threshold, consequent encroachment. and then see if we close above this consequent encroachment, can we now take out the high potentially. So if we let price play out, okay, fair value gap there, another nice strong displacement. From this candlestick onwards, I'm now looking at this high to get traded to. So if we let price play out, and there you go, hit the high right there. I hope you guys can understand how my thought process works when I'm determining my draw in liquidity. Okay, I'm always starting off with my low hanging objectives, really easy ones that we are likely to trade to, and then as we start to get closer to other objectives, I then progress like that. Okay, now I'm on a daily time frame on Euro USD. So same thing, guys, I'm going to take you through my thought process of how I derive my draw in liquidity / bias. Okay, so first off, what can I see on the daily? So on the daily, we're in a bit of a consolidation here. Optimal trade entry from this high to this low. We then get some nice aggressive displacement here, and then I can clearly see we're in a premium, so I'll be waiting. And this fair value gap has been unfilled, so this is my next point of reference, right? My next draw on liquidity. I'd like to see us fill this inefficiency right here. So if I play price out, okay, we have a very nice reaction off of that level right there. So my next draw on liquidity would be this swing high right there. So if we play price out, okay, we hit it right there. So now we have this BISI right here. Going into the next days, I'll be looking into seeing us potentially drop into this area right here. So if I play price out, so my next draw on liquidity, okay, we hit it right there. Have a nice reaction right there. So now I'd be wanting to see us take out this high right there. Okay, we hit that nicely. And I'll also be looking to take out this swing high right there, and we hit it there. So now let's go through this example here. I'll go into my lower time frames and show you how to go from a top down, from a daily down into your entry time frames, be it your 15, 5, 4, 3, 2, or 1. Close above this high nicely into a fair value gap, respecting consequent encroachment, closing in the upper half. So to me, my bias for the next day would be bullish, and going into the next few days, I'll be looking for this high to get taken. All right, guys, so now I'm on the 15-minute time frame. So again, this high right there, if I go back, this is the high we're framing off of, which is the daily high right there. That's what we'll be looking for to target as our ultimate objective. But then initially first, we're going to be looking to target these relatively equal highs right here. Okay, so this will be our initial drawn liquidity right there, and then ultimately hitting that one there. So now let's mark out our range that we're currently in. So if we mark from this high to this low, there's 50%. So this would actually be our initial one, drawn liquidity, and we're clearly in a discount. So we have a high probability in looking for buys after also seeing that we respected the daily fair value gap. Okay, so now playing price out. Right now it's a Thursday going into the new day, right? At midnight, New York midnight, which starts a new day. So let's play price out. Okay, we'll be looking for our kill zones. So right here from 2 to 5 AM Eastern Standard Time, that is our London Open kill zone. So we can look for an entry in this time period right here. And what can we see? We can see this order block right here. Frame an entry right off of this order block right there, opening price there, and then enter off of the opening price here and place our stop loss right at this low right there. Okay, so if we play price out, our initial draw will be right here for a nice 1 to 2.78 risk reward. So let's let price play out. Okay, hit take profit there on our first one. Okay, so now moving on, if you didn't take a trade in London, you can then always look at the New York AM session, okay, which is from in indices 9:30 AM Eastern Standard Time to New York lunch, which is at 12 PM. Okay, so let's see how price behaves right now. Got sell side liquidity below this low right there. Okay, and we've just hit 50%, so we can expect some form of a retracement. Okay, so let's see what happens. Okay, we trade below that low right there. See that? Okay, we get a nice reaction. So a nice valid liquidity sweep because we failed to close below this low and displace below it. Okay, and then we get some nice displacement. So now you can enter off of this down close candle here, which is a bullish order block. Right, so once we trade above it on this candlestick right here, like that, my entry would have been on a retest. As soon as we open on this candle here, I would have been long. Okay, so My entry would be right there. Stop loss right at the body down here. It should not go down here once we've taken out the sell side. And then I'll be looking to target this buy side liquidity pool right here for my first take profit, and then looking to take some of it off and then see if we can get up into this area here. So now let's let price play out. Let's see what happens. Okay, we're filled. Take profit, one hit. Okay, and then we hit our objective on the daily. Now guys, before we get right back into the video, I really quickly want to talk about my private mentorship. Now guys, if you give me 30 seconds, I promise you will change the whole trajectory of your trading career. With this mentorship guys, I will teach you the exact model that I've taught to my members, which has helped them to scale to over 7 figures plus in funding from prop firms, and they are consistently making $10,000 a month from trading. I have now put the price down by £100. It was previously $249.99, but you will now be getting it for a limited time only for $149.99. I will teach you the exact blueprint to help you get funded and quit your job guys, and live a life you've always wanted to live. Stop wasting your money on prop firms blowing challenges when you have not even learned the skill set in the first place. Okay, so start your journey to profitability today. Click the first link in the description and be a part of the best ICT community in the world. So with that being said, let's get straight back into the video. So hopefully you guys found this video insightful and you now know how to find the draw on liquidity, and I'll see you again next time.